Hello friends, I am Harsh Avasthi, Assistant Professor, Department of MBA, Noida Institute of Engineering and Technology, Greater Noida. Today, we are going to talk about the lecture 2 of the unit 1 of Financial Management and Corporate Finance, that is Corporate Finance, Corporate Governance and Agency Problems. So, starting with, let's try to find out the answers to some questions. What long-term investment should a firm take on? We can be talking about the investment decision, the capital busting decision. Because whenever a business is planning for new ventures, venturing into new ideas, establishing new courses, it becomes a very critical decision. It attracts a lot of expertise and significant value. So, what long-term investment should a firm take on is a valuable concern to which a business owner, an entrepreneur or a financial firm or any business organization must be very much concerned, whether to establish a new one or establishing the businesses and another courses of businesses with the running course of an existing business. Second, from where the firm will get the financing. Once we have identified that I am being an entrepreneur or a business firm going to start a new course of action, I am going to start a new business journey, then from where I would be getting the funds. Being an entrepreneur, whether I could be using my own equity or I could be asking others, for example, the financial institutions, shareholders' equity, but that would be coming at a cost. If I talk about the debt, I will have to service it, I will have to pay the EMIs, which would be a combination of principal as well as the interest. So, I have to pay for the interest. If I am going to talk about the shareholders' equity, when I need the money and someone is going to give me the money, at some time at least I have to show my gratitude that you helped me when I was needing the money. I have to think about the dividend decision. Now, how to manage everyday financial activities? See, now business is a process, it is a set of activities. We see from that orientation. It is not merely an infrastructural setup, it is combination of activities, it is combination of processes. Now, we also talk about the quality into the process. So, when we talk about how to manage everyday financial activities, this is again of paramount significance, because we have broken down the entire yearly setup of the business into the day-to-day activities, into the hourly activities. Now, businesses are such concerned about the hourly production, the hourly client served. So, these are the issues to which we have to take care now, the scenario in which we are living. So, going for the financial aspect, we have to manage our day-to-day financial needs. So, if we are able to find out the answers to these questions, it is somewhere, or we are intending to find out the answers to these questions, it is somewhere can be described that we are talking about the corporate finance. Proceeding further, the definition of the corporate finance, in words it can be said, it refers to the activities and transactions related to raising capital for the creations, development and acquisition of a business. Organization is intended to create the value. We have to create value, being an entrepreneur, being a business owner, being a financial manager. We have to develop our business. Whatever today we are, we want to grow from that position. We want to do more sales. more sales can be resulting into more revenue, more profits are going to be realized. When more profits are going to be realized, at that time company could be investing further, distributing dividends to the shareholders, stakeholders, earning faith of the society, and again attracting more investment towards its business. Ultimately, it's growing, it's developing. And acquisition of our business. Only investing my own venture is not a way to develop. I could be acquiring also, being an entrepreneur, being a business, other businesses. So, developing and acquiring the businesses, two methodologies are there, and creating the value. And for that value creation, for developing my existing business or by way of acquiring other businesses if I am going to grow, then from where I am going to manage all those activities, the aspect which is taking care of all those activities can be described at corporate finance. Corporate is a term which has been taken from the body corporate. If we talk about the Companies Act 2013, the company is also interchangeably named as body corporate. So, now today we are having the specialized knowledge, skills, technology, resources and other aspects of managing the business, how businesses are communicating with its clients, with other businesses, with its environment, whether external or the internal. So, number of dimensions are going to be taken care, but ultimately that all is for value creation, for developing and for growing and for acquiring the new ones. Now, it is directly related to the company's decisions which have financial or monetary impact. So, when we talk about the corporate finance, it is directly, exactly related to those set of activities which are having any kind of financial or monetary impact on my business. Though my finances could be affecting the sales of the organization, or the sales could be affecting the finances of the organization, my finances could be affecting the sales of the organizations. Means, if being a business I am not going to allocate the right amount of budget for the marketing and production department, then the production is not going to happen, then what my salespersons are going to sell. On the other hand, if my salespersons are going to sell and they are not able to sell, they are going to sell in the market, products and services are not going to be accepted by the customer, my output is not churning money for me, it is not creating value for me. So, from both the sides, I have to be very much cautious that whatever decision, whatever activity is going to have the financial or monetary aspect on my business or business processes or business activities or the business as an infrastructure, what I perceive, then I have to take care of that, because it is directly related to those activities and it is something we are talking about corporate finance. Lastly, we can say it is a liaison between capital market and the firm. In capital market, we can find the funds. Secondly, firm needs the funds to develop, to grow, to create the value, to acquire other businesses. Let us imagine if we say that firm needs the funds and only from the outside market, so what firm is doing under its operating activities? Whether it is getting profit out of its operating activities or it is having any kind of non-operating income. So, what purpose was there when I had established my business? That is of no use. So, when we talk about sourcing the fund from the outside world, capital market, money market, I should be also focusing on being a business owner, being a finance manager, being a firm, being an entrepreneur, that I should be also having my earnings and earnings out of those operating activities. Operating activities are where I am putting my input and converting that input into the output. It means I am working efficiently as a business. So, efficiency concept is hidden here. Capital market and firm both are related. Firm needs funds, capital market can provide it, but that fund would come at a cost. Yeah, on the other hand, if being an owner I am going to invest my own money, that is owner's equity, then I could be losing interest on my capital. If my business is able to give me those returns, then very happily I would be investing my money into the business, because ultimately I am the source. Business is a different entity, owner is a different entity. Owner is giving money to the business. So, when owner is giving money to the business, business must also give the reasonable amount of returns to the owner. So, that is when we talk about the liaison between the corporate market, capital market and the firm, it should be exercised very cautiously and with great amount of expertise. Now, we can talk about the areas where corporate finance is concerned with, or what areas it deal with. Number one, we talk about the business services. Today, the shift is moving from product to services. The developing economies or the developed economies are having a tendency or more contribution of services towards their GDP, that is gross domestic product. So, business services are of paramount importance if we talk about nowadays, and it will be in future also. Second area is consumer and industrial. We can be categorizing our market into consumer market and industrial market. In economics, we talk about consumer goods and industrial goods. There are a variety of goods. Some are used by the individual customers, consumers, and some are used by the industrial consumers and industrial customers. Quantity could be different, prices could be different, even the quality of the product could be entirely different, talking from the perspective of the consumer products and the industrial products. Then we talk about the financial services. Now, the financial services are technology driven. Our number of day-to-day financial activities, be it our investment, be it our saving, be it our speculation, whatsoever we fall in it, is completely backed up by the technology. Technology has changed the face how financial services are now going to be offered by the financial institutions. So, corporate finance is going to have an impact on that. Healthcare. Healthcare business is an emerging business nowadays because the lifestyle we are there with, the environment we are there with, the climate changes about which the developed and developing and even the least developed nations are concerned about that. The impact of those issues are going to be taken care into the healthcare sector. So, how my finances are able to service that healthcare sector. Then we talk about the technology. Technology is backing up or supporting each and every dimension of the business, each and every dimension. Name it, be it the planning, organizing, staffing, directing, controlling, production, whatsoever aspect of the business we can talk about today is backed up by technology or supported by technology in one or another way. And when we are going to infuse the technology, it is going to talk about funds. It is a life example of technology that being an instructor, I am delivering a lecture and that can be seen around the world. So, technology is backed up everywhere. Next, we talk about cross-border transactions. In the history of mankind, we can observe cross-border transactions, international trade, and primarily that was done through the sea routes. Some of the very credible contributions towards escalating and catalyzing that international trade can be taken from the infrastructure. We can talk about Panama Canal, Suez Canal. They have changed the entire route of the sea trade, thereby reducing a lot of cost of the companies which are engaged into the international trade via sea routes, and majority of the international trade is done by the sea routes. Mergers and acquisitions. For creating more value, for getting more synergy, for obtaining more efficiency, for adopting the world-class practices, for creating more value for the organization as well as the stakeholders, mergers and acquisitions could be one of the strategy. Whenever companies are going to merge or one company is going to acquire another company, proper valuations are done. Proper valuation of assets, proper valuation of liabilities, and that establishes the foundation of the price. Price is a very vital organ in the marketing ecosystem. Let it be the product, let it be the company, the price of a product, the price of the 1 kg salt, the price of 1 liter of milk, the price of an entire company. So, price is something which is a very vital organ in a marketing ecosystem. Then we talk about public equity offerings. Whatever going to be offered to the public as an investment into the organization, corporate finance is also going to deal with it, because at the times I could be needing money being a business, being an entrepreneur. Though there are set guidelines, set structure for investing the money of the public into the business organization, be it the structure, company, firm, the names can be used, different names can be used, but that is the area which is also going to be dealt under the corporate finance. Then we talk about public placements. There are a number of activities which are erected, which are installed, which are established for the public at large. Public utilities, infrastructural developments. Though those are of the huge amounts and primarily in all the economies, they are going to be taken care, they are going to be handled, they are going to be planned by the governments of those countries, but yes, corporate finance is going to take care of that, because ultimately the government is going to form its own company. It can be a government company, it could be a public enterprise which is there in development of infrastructure, making the airports, making the roads, bridges, schools, hospitals, etc. Lastly, we talk about the financial sponsor groups. Financial sponsor groups, venture capitalists, how we are going to get the money when we are needing it, how we are going to raise the funds when we are needing it, and from where we are going to get them. That is something which is the sponsor group, which is going to sponsor my business activities, which is going to sponsor my business processes, which is going to incubate my business idea into a commercial feasible product. Because being an idea generator, I am having only an idea, I need funds to commercialize that idea into a commercially feasible, sellable, transactable product. From where those funds will come? Because I need input, I need to purchase machinery, I need to install a sales system and other systems also, other structures also. So, I could be getting money with a sound idea, both mixed, processes started, activities started, production started, some product is there in my hands, I am there in the market with some amount of service, and when I am going to sell that product, good or service, I could be realizing money, I could be realizing profit. Yeah, One thing I have to remember when I am thinking about realizing the profit, again I will emphasize on that. I have to be very much clear, being a business, that whether it's a cash sale or a credit sale, because in case of a cash sale I am instantly going to realize the profit, and that is in my cash box, in my bank book. But when I am going to do a credit sale, things could be dicey, because someone who has purchased from me and has not paid for that, it's a debtor for the business. Seeing on a positive ground, that debtor could be returning my money within a due course of time, which is comfortable to me as a business and to that person also being a debtor. But what if that money is not returned in due course of time, or not returned fully, returned partly only, and the worst case, not at all returned? That's a bad debt. Now I sold the things, I sold my product, and I realize nothing. So I have to ensure the liquidity. So these are a few of the areas to which we can talk about, which are related to the corporate finance, and corporate finance is having a direct intervention, a direct application into these areas. Now we would be discussing about the scope of corporate finance. So first is estimating the financial requirements. Whenever business is planned, some business activity is planned, then I have to estimate for the funds requirement. What amount of fund would be required for starting this business? Then deciding the capital structure. Capital structure is the combination, that with which combination I am going to start my business, whether it's my own money in entirety or I am to borrow it from someone, equity plus debt. Selecting sources of finance. See, when being a business manager, being an entrepreneur, being a firm, I search for the sources of the funds. I could be finding number of sources into the capital market and money market. Now I have to evaluate the sources of the funds. That evaluation can be done on the basis of their availability, on the basis of their sustainability, on the basis of their cost, etc. So whatsoever is assuming to be feasible as per my capacity, whether I can use this fund, whether I can repay the debt within the due course of time, whatsoever criteria I am going to devise into my mind, being an entrepreneur, being a business, I have to select that source of fund. That is the decision making, selecting the best alternative out of many. But I have to think here about the bounded rationality also. What are my limitations? What are the ceilings on me which are going to restrict me to select a particular course of action? So when I talk about decision making, being a manager, being a firm, I have to be also very much clear about my bounded rationality. Then we have to select the patterns of the investment. That could be related to the time. Which activity is going to give me more value, which activity is going to create the lesser value, what amount I should invest now, what should be kept. These are number of investment patterns to which I have to take care, being a business manager, being a firm. Then proper cash management. There is a very famous saying, turnover is vanity, profit is sanity, and cash is king. Cash is ultimately, which is the most liquid form of money within the business, within my hands, that is having the extreme power. So there are methodologies, there are techniques of proper cash management to which we would be discussing later, but proper cash management is maintaining the proper amount of liquidity into the business, so that whenever any amount of contingency or emergency is going to be faced by the business, that could be countered. It is the proper cash management. Implementing financial controls. See, establishing the processes and activities is good. We are going to enlarge them. We are going to expand them. But this expansion, this enlargement should not be at all on the cost of losing the control. So, whenever I am going to devise, I am going to define, I am going to construct any of the activity, set of activities, business processes, I have to very much sure that I am going to put a proper control mechanism of the processes towards the efficiency, so that my resources are not going to be brought under any kind of pressure or strain. I could not be losing my valuable resources. And lastly, proper utilization of surplus. If there is good amount of surplus with the business, then we have to be very much cautious. We have to put corrective actions that where this surplus can be used, whether I have to use that surplus for the distribution of dividends or I have to retain it for the future investments. Now, we talk about the corporate governance. Corporate governance refers to the way a corporation is governed, how we are going to run it, a body corporate, how its activities are going on, how they are controlled. It means carrying the business as per the stakeholders' desires. See, stakeholders are the managers, they are the employers, they are the employees, they are the consumers, clients, tax authorities, government. So, whatever expectations the stakeholders are going to have with the organization, we have to take care of that. It deals with determining ways to take effective strategic decisions. See, when we talk about the strategic decisions, those are concerned with the top management, those are known as the top level decisions. They are not the routine decisions, they are the critical ones, they are the corporate decisions. So, corporate governance is going to deal with the strategic decisions and gives ultimate authority and complete responsibility to the board of directors. This corporate governance gives the ultimate responsibility and authority to the board of directors to conduct the courses of the organization in a way which is going to be most suitable for the organization. Now, this is the structure where we can see the corporate governance, how it is going to work, how it is going to be seen into the organization. Further, we can talk about the guiding principles of the corporate governance. Building sustainable long-term value. Once a business is established, corporate governance says that the value should be sustainable. Strategy formulation and implementation. It is the role of the board of directors, it is the duty of the board of the directors to formulate and implement the right amount of strategies, correct amount of strategies. Fairly presenting firm's financial condition. Firm's financial condition must be fairly presented to the stakeholders. There should not be any inflation or deflation. Keeping transparency, whatever is going to happen into the organization, that could be clearly pictured to the outside world. Security of the stakeholders' interests. Whosoever has invested into the organization, then I have to take care of that being a business manager. And now, allocation of funds in the most beneficial way, that when I am going to use the funds, I am going to allocate them in such a way so that it is going to create the maximum amount of value for the organization. Now, let us talk about the agency theory. Agency theory talks about that management is the principal, owner, and the board of directors, they are the agents. They are working for the organization, they are working for the best interest of the stakeholders. So, this is a picture by which we can understand principal is the owner of the business, agents are the board of directors or the employees who are working at the top level. Both are having their own interests. Now, there are conflicts of the interests between them. This is known as the agency problem. And what we have to do, what we have to learn about, there are conflicts between the stakeholders, equity holders, lenders, employers and suppliers. This is the agency problem, because both are having, all are having their own interests, there are conflicts, and the firm's objective may differ from the stakeholders' objectives. So, being a business, being a firm, we have to be very much sure that objectives are not going to be clashed and firm is going to run in a smooth fashion. So, that is all for today's lecture. Thank you very much.